Wednesday morning, it's 8 o'clock here on the west coast of California. Dr. K is roaming around in Europe again, but we're both here. What's the market doing? The market, what do you got here? You got a big rally up off the lows. You go to a buy signal near the 200-day moving average on the model, and you're pulling back. So far, it looks normal, but today you got volume is up a little bit, so we'll just kind of see how this all pans out. But the situation is somewhat fluid, and they're kind of sitting around waiting to see what Germany is doing. So it's kind of, you see the market pulling back here in a waiting game. I don't know, if the market's going to rally when they finally announce that they've come up with a new way to print euros, which seems to be what they're haggling over. I mean, Dr. K, you're out there in Europe. Am I missing anything there? To me, it just seems like they're haggling over, how much ink to put in the printing press, what color ink, what kind of paper. It just seems like they're just arguing over how much more money they're going to borrow, which just seems to perpetuate this situation. I mean, what's your take over there, being over there right now?
Well, it doesn't matter where you are. I mean, it's just, the news comes, in fast and furious wherever you are in the globe. So we're all pretty much on the equal playing field there. And, the Germans are just, they're going to foot drag. I know this is, they don't have a vested interest in printing. That's why the Fed had to step in, the U.S. Fed had to step in recently and get all the central banks in alignment. So that was a big step forward for this sort of easing process, which is why the markets have rallied. I think that's going to be very powerful going forward. The Germans can foot drag, and that's going to cause temporary pullbacks in the market, but I think ultimately money printing is the tour de force of the times. So I would keep an eye on precious metals, commodities. Those should overall do well. Stocks should also do well, but I think in a potentially grinding way as they grind higher.
Yeah, and you can see these gap ups, and you get these big gap moves, but really net, you just got this very volatile environment, and so if you're trying to play it, I think either way it's just very tough because you're really not going anywhere, and it's going to chop back and forth. On the market direction model buy signal, was it last week, or when was that, Dr. K? Monday? Tuesday? Wednesday? Last week? I forget.
It was on the 2nd, December 2nd. It was very...
Okay, so we had the buy signal. Yeah, our approach, actually, given the fact, some people have asked about this with the market direction model going on a buy signal right at the 200-day moving average. Well, yeah, you can see that, but the market direction model
that's actually not. That's an incorrect statement because the Nasdaq was almost 1.6 away. The 200 days
right in here, right here, actually.
Yeah, and the S&P was like 1.5. So also the 200-day is one factor of many factors. And if you look at October and November, for instance, on the Nasdaq, these averages will go right through the 200-day.
Right.
And that might trip people up into thinking, wait, I don't want to miss this rally, so they get in late when they're up 2% above the 200-day, only to see the averages fall right back.
Right. So actually coming in, waiting. Somebody suggests, well, why didn't you come to put a buy signal on when you at least got above the 200-day moving average? And I think you just addressed that very well. Because you can see what happens when they fake you out by bringing it up above the 200-day moving average. So you're just in a very choppy environment, and that's the bottom line. And so, we can't sit here and say, oh, buy this, buy that, short this, short that, because you're just in kind of chop and slop. Our approach has been to, on the buy signal, given the fact that we know how this market has been acting, we know that it's QE driven, is just to take the slow and steady approach, and that was to take a 10% position in the TNA, which is what we own right now, and we're just hanging out with that. We also own, let's go to my, get away from this index chart. Let's go, looking at gold, we have gold bought, we have a position bought on this pocket pivot, and it's just holding. So we stuck to our rules. You had a close below the 50-day moving average a couple of weeks ago, but since then, no violation, because you closed below once, you have to move below the low of this day in order to have a clear violation of the 50-day moving average, and we stayed disciplined. And so we're sitting here with this positions in gold and silver, and of course the two kind of mimic each other. And there's, the action over the past few weeks has been very similar. If you look at SLV, it's underneath this little area of overhead supply. So we're kind of sitting here watching it. Notice here's the 50-day moving average. We're sitting here watching and see if we get a pocket pivot Didn't quite get one yesterday. You're actually working against this day here right now, which was 11/23 or November 23rd, and you're looking at volume of 19,286,552. So that's the kind of volume you want to see here on this kind of on a pocket pivot on this, you know, just trying to get up to the 50-day. And I'd watch for that because you could get through this pretty quickly, but it may take some time. But it's not, you know, it's still a slow boat to China. So the SLV position, actually the AGQ position is running roughly even with where we bought it, whereas we're up in the DGP, roughly where we bought it, a little bit above, and that's really where we're at. So it's not really any progress here. And if you're buying stocks, you find the same thing. Intuitive Surgical, just hanging out. You get a correction, and it rallies back up. You know, you get this pattern where it's going like a base on base. It looks like, you know, you got this little cup in hand, you got another base on here, but really, where is it going? Not really going anywhere. Other stocks that have been trying to act okay, Q-Core, you know, hanging in there, but not really going anywhere, just kind of back and forth. Look at, let's see, how about if we run through some names real quick? So, you know, our thoughts on gold and silver, just to answer the quick question here, is that, you know, we have a position based on the original buy signal, and we're just hanging out, you know. We're going to do slow and steady and average up as these things work and prove themselves. Otherwise, we're not going to stick our necks out too far in this environment because it's just not all that rewarding, you know. And you get frustrated and you're wasting your time, you know, I think. So I still have a little day trading account that I try to mess around in, and there's nothing going on. Everything is so choppy intraday. And there are no real trends where you're going to make any big money, so it's just kind of like, eh. Now, on the other hand, let's, you know, what stocks? Somebody asking us, are you holding any longs overnight? Why do we have to tell you that? And why do you care? That's what I want to know. Gil, mid-2000s, you would comment on the dearth of quality stocks that were hitting your fundamentals, and you often would give a number. What is the current state of the... Well, what you have here is kind of like what Dr. K's been talking about as well, is that this rally, it reminds us of 2009 in the sense that you're seeing junky rallies off the bottom, and that's what's driving most of it. That's why you don't see a lot of leadership. You know, can everybody see my screen okay? Just shoot us a yes if you see the screen okay. You should be seeing a chart of GLD. Yes, okay. All right, whoever can't see the screen, there's something wrong with your system. Just wanted to confirm that for you. Scott. So you're the one asking. Amazon, somebody asking, are you still looking at Amazon for short? Well, you know, it comes up into the 200-day moving average. Yeah, it becomes shortable, and yeah, I am short it right now. But it's not like I'm making any big money on it. A few percent one way or the other isn't anything. What you're looking for is a big breakdown, but you're not really getting that. But it does look like it's in a position to break. But who knows? You know, this market is so screwy. Who knows whether that's going to break down, you just end up chopping and slopping for a period of time. So you can come in and test these things. If you look at Apple, you know, it's starting to break here. It's back below the 50-day moving average. I'm not sure if volume is up today. Volume is actually 10% below average right now. So nothing, you know, nothing terribly thrilling there. Just a big move up, opportunity. We have a little pullback. Notice it's holding the 65-day exponential right here, the black moving average. So, you know, goes up, pulls back. Are you going to short it? Well, you can try shorting it up here on this rally. Notice it comes up into this area of overhead, comes just above the 50-day. If you shorted it up there, you're up a few percent, you know, a couple percent, and that's about it. So same thing goes with Amazon. Same thing goes with CRM. You know, they gap it up. People come out with buy recommendations. Very common during a weak market environment where you see broken down stocks will get driven up off the lows because analysts love to recommend stocks when they're cheap. It's an easy sell, and you have to remember that these brokerages that put out buy and sell recommendations do so for the express purpose of generating commissions by getting people to go with their recommendations and place orders through them. So we know how that goes. And that's pretty much the law of the land as far as that goes. So, you know, things get cheap. It's an easy sell. You'll see buy recommendations pushing things up, and you get these gaps with the market. Now it's kind of drifting off. If you shorted around the 50-day, you're up a couple bucks. You're only going to make big money if it starts to break down, but that could still happen. You really don't know. You know, that's why we're not in 100% with the TNA. We're only in here 10%. We're testing the waters, and we'll let the market prove itself, because that's the kind of environment you're in. Are you going to get a Christmas rally? I don't know. Maybe we already had it, and it ran into the 200-day moving average here, and that's going to be it. Who knows? But we'll see in the next couple of days. The ECB comes out tomorrow, and they're going to announce whatever money printing scheme they've come up with, and we'll see what happens. I mean, does the market rally on that news? It's already expecting that, so is it a sell the news type of situation? Well, you don't know, so what are we doing? We're just holding gold and silver and a 10% position in the TNA, and that's about it. Not much else to do there. So let's see. Some people asking, so, you know, getting back to that question about 2009, you are seeing junky stocks come off the bottom. So it is similar, but it doesn't mean anything, because you already know that 2009, the market rally anyway. So if we're going to get a QE rally, we're going to get a QE rally, and that's about the end of the story right there. So we'll see what happens. But, you know, in my mind, I'm less sanguine about the idea that, oh, if we have more QE, it's going to lead to a rally in stocks. I don't necessarily think that that's the case. You have to watch and see what happens. And I do think, though, if they print more money, you're going to see gold and silver rally. And so we're just watching those very carefully here, and obviously we're long those. And we do hold them overnight because we're not trying to trade them and flip in and out. We're trying to play it slow and steady, and we're sized correctly. So I think that's really the only way to work it. You know, and that's kind of how we started out the year. This year, you know, working a couple things one or the other, and we finally latched on to SLV, and we played that very steadily, let it prove itself, averaged up every 10% and made big money, and that's why we're up for the year. So that's kind of been the secret. It's slow and steady. So trying to come in here and trying to get tricky, you know, doesn't, or get aggressive too soon, I don't think it's going to pay off. You end up just getting dinged. So that's kind of where we're at. Someone's asking about Lulu. You know, Lulu is an interesting thought, because I thought, it kind of fooled me, because I thought, look at this huge volume, and you see you get this support, and you have these big support lines off of here, and you go 1, 2, 3 waves of selling. So it almost feels like, to me, like the selling is done on this thing, and it's probably going to try and rally, but I was wrong on that, because it hit the 200-day moving average, it's come down, and the volume has been above average. That red line along the bottom, that's the 50-day moving average of volume, so we can see that the volume has been well above average over the last 3 days as this turkey comes down. So, you know, I thought it might get support. I remember, I think it was United Health in 2003, 2004. It sold off on some news, and then the stock got huge support like that on the weekly chart, and then it continued higher. It's not panning out, you know, this way on Lulu. It's kind of interesting that that happens, because you did have this huge volume sell-off and gap down, and the thing rallies back up to the peak, and the next thing you're gapping into the 200-day moving average. That's actually a short right there. So I kind of missed that one. But, hey, can't kiss all the babies. But it looks pretty weak. I wouldn't short it here, although it could continue lower. You're in a higher risk spot. It would have been better to short around the 200-day moving average. So, Dr. K, did you have any comments on this sort of action in the stock? I know there were some email questions that came in.
Yeah.
Yeah, there was some comments on this.
Someone wanted to know, because of the gap down, and it closes at the top end of its range on big volume, if that could be considered a possible buy point, or to watch for a buy point after that. And the answer is pretty much no. I mean, when you see a gap down, to gap down, if this had completely retraced the gap and closed, say, at the 50-day moving average, that's a different story. That certainly is a sign of valid support. But in this case, it didn't fill the gap. It still was down appreciable amount for that day. And then the next day, it goes up to the 200-day on weekly volume. Yeah, it just doesn't look right. I mean, I think I answered the person. You know, if this stock is going to correct this defect, this gap down defect, it's going to take many weeks for it to do so. And you know, you can keep watching it over the ensuing weeks and wait for constructive price volume action to set into the base of that.
Yeah, it looks toppy to me. I mean, if this support doesn't really hold, it's kind of starting to look toppy. You know, double bottom pattern, late stage base failure, wide loose, double bottom. But the thing about Lulu is, look at this over here. You had these. This is a weekly chart, by the way, and look how you had all this wide and loose stuff. And I remember when this thing came out of this pattern, I thought, man, that thing's ugly. It's a double bottom. and it comes out and it's just really wide and loose and ugly, and it actually worked and the stock took off. So you never know in this market, things get screwy. Things that you don't think would work do work, and then when you think you're seeing support, it fails here. So, but I think Dr. K made some pretty good points in that you didn't fill the gap on this first day. You would probably want to see it fill the gap, and that's probably what I missed in my assessment of the stock, and not thinking it should have been shorted there, because obviously in hindsight it should have been. So, that's easy. That's what you got to love about the stock market. There are no affirmative action programs in the stock market. Nobody's hiring you or assessing your performance based on your race, creed, color, religion, or sexual preference, and it just gives you your report card. And I have to tell you that when it does, you just pay attention to what the market's teaching you and listen to the market's message. So, all right, still running through some names. Let's see here. MasterCard, MA, what our assessment of that. Here's a situation where it moves up and it pulls back, but that's kind of the story with MasterCard. Moves up slow, pulls back, moves up sharply, and pulls back. So there's no real momentum in any names, and you have to ask yourself, if MasterCard, here's what it looks like on the weekly chart. I don't know, is this like kind of an ascending base? Is it trying to break out? It's kind of interesting, the pattern. It is kind of an ascending base, so it's been trying to go higher. Maybe the new currency isn't gold, or dollars or euros. Maybe the new currency is just plastic.
Credit.
They all have, in fact, when I was at Stanford, I had a friend who was an engineer. He thought that people should be compensated based on their effort. So you would attach some electrodes to their brain to measure ergs, which is their brain power, and that would represent their brain. The level at which their brain was working, and one would be compensated that way and would be electronically linked to a credit card. Now, this is back in 1978, and it's interesting how now we see the technologies converging that could enable something like that. But maybe that's what's driving these things. V is also moving up in this sort of ascending pattern, but it's choppy. And look at how wide and loose the ranges are. Actually, this is a arithmetic chart, so I should probably fix this and make it, there we go. No, that's wrong.
If the new currency is credit, we're just going to get right back to where we started with the subprime debt crisis, the new incarnations.
Yeah, exactly. And so, those are pretty. Let's go through some more questions. Okay, there's a bunch of yeses. Okay, Roger. Why bother with ETFs then in this market? Well, that's a good question, but we have a buy signal, so we pay attention to the buy signal. You can ignore a signal if you want to, and I remember, we get occasional. There's always the big ego out there. I remember on this day when we went to a sell signal here, okay, the next day somebody's emailing us telling us, thank you for calling the bottom. Well, thank you for calling further downtrend, I guess. But the point here is when you get a signal, we take the signal. Now, we think you're in a chop and slop environment right here because the evidence is there. And so we just take a smaller point. I mean, what's the point of ever being in the market anyways, assuming that you know what it's going to be doing? We have no idea whether a trend is going to start next month, next week, tomorrow, or not until next year. We have no idea of knowing. So whenever we get a signal, we're going to test that signal and make it prove itself, and we'll just operate on that basis. So that's the point.
Yeah, actually, it's a good question. Well, any question's a good question. If someone asked it, there's other people probably asking that same question in their minds. Why play ETFs in this very choppy environment? But the problem is that it's difficult to know when you're going to get an open window of opportunity. And the case in point would be in 2011, for the first 6 months, it was a choppy, trendless market, and the model was barely holding its own. It was pretty much flat, which is, I guess, that's good given a trendless market environment. Normally, it should be down. And I know that the trend following wizards that are tracked were all down, or collectively down as a group. But then we had this huge window open in August where the model in one fell swoop on one sell signal more than made up. I mean, well, it didn't have to make up for losses because it was pretty flat by that point, but it had a huge gain, huge score in August, and then the subsequent 4 signals. So it had 5 signals in a row, which were all winning, highly profitable signals. So if someone had left the market and discussed, and I know we had a couple you know, there's always 1 out of 100, you know, members that just throw in the towel, you know, and we had a couple of those in July, and they completely missed out on, you know, on 5 true signals generated by the model. And I don't keep track of, you know, the individual accounts. I don't know if any of them, you know, joined up again, but it's interesting because you'll hear like, you know, 1 out of 100 emails might be something negative, you know, or frustration, and I understand, you know, it's a frustrating environment. And it's curious to know if they come back or they give the market another shot or they learn something from it in the sense that you can't just try to pick your spots or pick your ETFs or pick the model signals. You just kind of have to either be in or be out. But what you can pick is your position size, and especially in a market like this year, it's good to pyramid slowly into positions because if the signal is false, you're going to lose a lot less.
Yeah, so slow and steady is probably the only way to win the race, if at all. So, why is LNKD listed twice on your screen? Because it's a double secret buy. That's why. I don't know. Maybe because I just kind of made a mistake. So, there, it's gone now. What did that mean? That was my double secret. Well, interesting you asked. I'm going to come clean on this one. But you know what? The reason it's on there is because it's a mistake. Number one, you notice Netflix is on there twice too. Sometimes, you know, I'm not paying attention to what I'm doing. So here, let me put some other symbols on here twice. Let's see. How about, what does that mean? Look, I got 3 GEs, everybody. That has some secret meaning. Watch out.
Hey, that's a Buffett stock.
But all kidding aside, I'm gonna just I shorted this rally on this gap on LinkedIn here because you're coming up into this area of resistance, and you got a bunch of hack retail shops out there pumping the stock. So I don't know. Maybe it runs. Maybe it keeps going to the 50-day. But I don't know. I'm just testing it out. We'll see if it works. And I wouldn't necessarily advise everyone else to come running in and shorting things because I'm only playing with less than 1/3 of my capital, and you know, I'm not really worried too much if I take a ding here and there. But you know, net, there's not much progress to be made in this environment. So that may be why I have LinkedIn there. Maybe I added it and I didn't know I already had it on there. This is the position right now. But I'm just testing these out. But you know, there's really nothing going on. Now, the interesting thing I'm watching in the market right now, you notice how the Dow is rallying. Yeah, you still have S&P's down 0.5%, Nasdaq's down 0.78, and a lot of that's probably Russell too because you're only down 0.59 on the Nasdaq 100. And I remember seeing this pattern when the market was up around the 200-day moving average the last time it broke down up in here, where you started to see the Dow outperforming like they're hiding in big cap stocks. So that's kind of interesting. But you know, I think some of these names can be looked at on the short side. So you know, LinkedIn might take here, short it, use the high, use 75, 76 as a quick stop maybe. But we'll see. You know, I haven't had a lot of luck doing much of anything on the short side over the past couple of weeks and been caught in a couple of gap ups where I get hit for 2, 3, 4%. But you know, that's just part of the game. But again, I'm only playing with less than 1/3 of my capital, so it's not like I'm overall exposed in a big way. So, but that's kind of how we're approaching the market, and it's tough. So, GNC, people are asking about. Well, let's go to this chart. Well, you know, this is another situation. Stock breaks out. These guys are a vitamin company. Stock breaks out and get a gap down. Was there some news on this thing today, Dr. K, you know?
I'm just checking right now. Looks news related.
I mean, that's just kind of a typical, you know, typical in this market. So you're going to see stocks doing it. That's where you buy. You know, you'd buy here, but where do you add? Here's a pocket pivot, I guess you'd add there. No, that wasn't a pocket pivot, so you wouldn't add there. So there's no real add points. If you bought the breakout, you know, you're back to where you started, and that's kind of the story of this market. You know, a little bit frustrated. Anyways, Ron, thanks for the question on LinkedIn.
Yeah, you know, I'm not seeing any news on it, and actually the volume is pretty light. So yeah, I think, you know, IPO.
Is IBD's master's program worth it? I don't know. You have to go and find out. I've never been, and I never taught it, and you know, so I don't know what to say. I've never been to it. I know some people think it's great. Some people think it's baloney. Whatever. You know, you're gonna get different opinions. But I think if you want to really know, find out. But my view is, I worked with Bill O'Neill for 8 years. This is the best experience of my career, and I think Dr. K would agree in terms of what you learn about the market. So, if you can afford the money to hang out with Bill O'Neill for a weekend, why not? That's all I have to say. So, here's a question, Dr. K. Gold has been unable to break through the downtrend line since 9/6. That would be the September 6th high. Would you see that as significant to long-term owners? And Dr. K, we need your brain.
Well, I'm working on my cloning device. The downtrend line, it's gonna. If you look back on GLD, the weekly. Let's look at the weekly, and you'll see that when it's in a basing pattern, it sometimes will have trouble breaking that downtrend line. It'll continue to base for another few weeks, but eventually it'll round out the base and then move through that downtrend line, and it'll have a base breakout. And that's what it's looking like here. I think maybe it's possible that it's a little too soon, and we need to see a few more weeks in gold to round out its basing pattern before it breaks out and moves or approaches new highs again.
Yeah, and for those of you who like to buy trendline breakouts, you can just do this. And here's if you're waiting to buy gold, just draw a nice. Look at how beautiful that is. You connect the tops, and just wait for a breakout through 170 and change. And maybe that would probably, well, it might be too high for a pocket pivot at that point, but maybe you can get one somewhere off the 10-day here. But yeah, that's one. I actually have an alert on this trend line just to see when this thing finally does bust through. But it's acting okay, and that's about, yeah. Let's see. Is eSignal better than TradeStation? I don't know. We use eSignal, so we're used to it. I have no idea. I think they're the same, basically. Panera. I like Panera. It's actually, Dr. K, remember a while ago, let's get all this garbage off of here. A while ago, Dr. K said that the only stock he would buy, and that was while it was sitting in this base, is Panera. And look at it, broke out. You had a nice tight pattern in here. I also think, let's see, that you have, this is kind of a short stroke pattern, but you're pretty tight in here, nice little flag, and it moves higher. So it's acting well. If you own it, you're holding the 10 days, so you're in Fat City right now as far as this market goes, because you may have one of the better performing stocks that's held up better for longer than any others. Any thoughts on GPOR? I'd have to say, for the most part, if we don't talk about something on the website and you ask us our thoughts, it's probably, we don't really have any. I don't really have thoughts about everything. I try to keep some room for thoughts that don't have to do with the stock market, which often are more pleasant, particularly in this environment. So I don't know. I'm not interested. PRGO, we're not really looking at that either. Parago, I mean, it's hanging out. See on the weekly chart, they're just hanging out. It's just, I'm losing my way here. Let's get rid of these. This is actually an index chart, so.
I'd get careful with PRGO just because it had that gap down on
yeah, this looks pretty
That's
good.
A defect in the pattern. If it wants to correct a defect, it could. It could get constructive in here and then issue a legitimate breakout, but I would still be mindful of that gap down.
Yeah. Yeah, I think somebody makes a wise observation here. Sounds like you are saying proceed with caution. If we get some heavy volume to the upside in positions like GLD, SLD, IWN, which for us is a TNA, then one can get more aggressive with adding to positions. Same goes to the downside regarding shorting. Exactly. So you kind of just, going slow and seeing what happens here. So, and I think the situation is still very fluid. So somebody says here, why take the Masters Pro and IBD when you are trading with the True Masters, Bill and Dr. K? Well, I mean, the True Master is Bill O'Neill, so, so like I said, if you have a chance to spend the weekend with Bill O'Neill talking about the market, and you can afford 15 grand, I can tell you this much. I think, personally, that it's not that much of a price to pay. Because I know 8 years with Bill O'Neill was easily the best learning experience of my career. I think Dr. K will confirm that.
Yeah, it's great stuff. But I mean, I think really what makes a difference at the end of the day is being diligent and focused on your own trading, staying student, learning. and just every day, relentlessly studying the markets, no matter what the markets are doing. I know people have a tendency sometimes to get discouraged and frustrated, especially in a year like this year, where they just walk away from the market for a while, maybe for a few months. I mean,
Yeah.
it's better if you can just stick with it. That doesn't mean you have to invest your money. It certainly doesn't. But it means that you're still keeping an eye on the market and you are continuing to keep a journal, trading journal. Even if you don't trade, you can still write thoughts on maybe on why you didn't take a trade or why you might have taken a trade. And it's just a good learning process that you can then review down the line.
Yeah, somebody actually asking a question. I didn't see your question, but it actually dovetails with what I was talking about when I was noticing you can see the Dow rallying and it's outperforming the other indexes. And somebody says, Ronald says, if there's a rally and the Dow leads and NASDAQ, it usually fails. Do you agree? Like I was saying, I've seen that happen before. And Bill Neal used to point that out to me, that when that's happening, be careful, because what institutions are doing is they're piling into the big cap names, and it's a quasi-defensive maneuver. So, we'll see what happens as this all progresses here. So, IBD has a DVD program for $600. Yeah, yeah, but you're right, Dave. And you can get that. So try that. But again, if you get a chance to hang out with Bill and Neal for the weekend, that's really the point. So not too many questions, but I think most of you can see, what the point here is. And we come in every day on our desk and ask ourselves, well, should we talk about what's going on in the market? Should we have another webinar? It's a confusing time, but I think nothing confuses people more during a confusing market than a lot of commentary. Sometimes I think what we don't say is as important and sometimes more important than what we do say, because the bottom line is there's not a heck of a lot here that we can sink our teeth into. And I would have to say, other than quick trades on the short side and the long side, almost day trading, you can make some money that way. I know somebody was mentioning that they are short Apple and they added to the position here, but where is it going? Where's it going? You pull back to the 65-day exponential, you're back on top of this little formation here. You're going to make big money, or is Apple doing something? Here's a pattern on Apple on the weekly chart. Is it trying to form a base? You notice as you come down here on the weekly chart, your volume declines, so it's not like you run into a pile of selling in there. So is it forming into a head and shoulders? Well, it doesn't really. It could. This could be a left shoulder, right shoulder, and here's left shoulder, head, and then a right shoulder. Maybe that's what's going on. Maybe it will pan out. So if you're shorting this, then you're just kind of hanging out. You're up a little bit, but like I said, where's the big progress? Where's that going to be made? How does Gentex? I don't know. It doesn't hit my screens, and breaks out, pulls back. So I don't know. Beth, any comments on that?
Let's see. It's forming a pretty lengthy basing pattern. Had a gap up recently. That's constructive. And let me just see here real quick on the fundamental side. It looks, it's basing out. I wouldn't play this. It doesn't seem like a leadership material at this juncture. But
right, it's just a big ugly formation.
Keep an eye on the basing pattern. It might round out and then break out from there, and it might have a gap up breakout on good news. Might be a viable gap up, but who knows? It's pointless to try to conjecture about what's going to happen in the future. As Dakota always said, the future doesn't exist.
Yeah, exactly. So, but there's a lot of sloppy patterns. So I can see people are being lured into sloppy pattern stocks that maybe aren't the greatest leaders. You also have had a big move. Is this a late stage base, or is it going to go? Is it going to break out and go higher? So far, it's not. But this is kind of nature of the game. But I think these are lower quality games. Somebody asks, are the fundamental parameters of the growth metrics of the Cansom system relative to what you're looking at or own? Are they relevant? And they talk about Walmart shaping up technically. I guess Walmart's trying to break out, but I see that more as a defensive type of name. The big box retailers have been doing well. You've seen Costco hanging up as well. And even some of the cheap discount retailers, same thing.
And Walmart would never be a canceled stock just because it doesn't have the numbers. Doesn't pull up the right numbers.
They're not. they're not that important, you know, and as we used to use them at O'Neill, I mean, think about it. Lockheed, I bought Lockheed in 2001, in September, October of 2001, right after 9/11. That didn't really have great fundamental numbers at the time. They did pick up over the next few quarters. Look at a stock we played this year and last year, Molycorp, and you know, you can see that never really had the fundamentals when it had the big move. And in fact, it was projected to lose money, and that was when we had, you know, pocket pivot in here and then another pocket pivot in here that we bought. So no, it's not that important. Dr. K, you want to talk about keeping a trade journal for a second? I'm going to take a quick bathroom break and I'll be back in 30 seconds.
Sure. Trading journal, we mentioned this before because it's a great exercise for every trader to practice. Essentially, whenever you make a buy in a stock or a pyramid your position, or you decide you want to cut back, or even if you're thinking about it, you put it in your journal. You also might include why, you know, certain aspects of the trading day that led you to that decision. You might include certain news headlines of the day, because what ultimately happens is when you go back and review your trading journal, and I'd advise reviewing it probably once every quarter, you're going to see how your thinking has improved, how it's evolved, how certain things you put in that journal may have at the time have seemed important, like certain news events, and then in hindsight you realize that it was part of your learning process, part of your education, and that those news items are actually quite irrelevant. You can also go ahead and include every buy and sell point you did in your own trading account on charts, mark up the charts, and review those every quarter. I know Neil is always fond of saying that at the end of every year he'll go, he still does this, this is a normal practice for him, to go through every single stock he bought and sold during the year in marked up charts, so that he can see clearly if there were any weaknesses in his trading. Of course, we know that the market is going to change, it morphs, there's going to be new situations, we're in the middle of a new situation right now, and so that is naturally going to affect one's trading, no matter how much experience one has under their belt. I mean, Bill O'Neill's been doing this for over 50 years. Gil and I have been doing this for about 20 years, and we're always going to be students of the market because the markets will always change. What we're seeing in 2011 is quite an unusual surprise, and I'm sure we're going to get more unusual surprises down the line. Some of these unusual surprises might be like another 1999 or a 1995, where you just get this concerted huge uptrend. You don't know,
or late 2008.
Yeah, exactly. little.
Anyways, in our new book, I think we're going to have a section on trading diaries and the whole post-analysis thing. So maybe we'll include a trading diary form, so some interesting little built-in things in the format. But we'll see. We're in the process. We just finished Chapter 1, writing Chapter 1. We're working on Chapter 2, so looking forward to getting that done. CXO, Concho Resources, oil stocks acting okay. You have a nice gap up. Not sure if that's a viable gap up, but it is a nice gap up. And CLR, Continental Resources as well. Same thing. They're all looking the same. So, you know, gold, oil has been rallying and continuing to move higher. And a lot of that may be, you know, some of the noise coming out of Iran, and they're talking about boycotting Iranian exports or shutting them down, and that'll increase the price of oil, blah, 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 and that may be one of the factors. So I don't know if it's necessarily economically driven. But oil's never biased. Somebody's saying, any sector ETFs looking inviting on this MDM buy signal? No, not specifically. Ulta, people ask about. I mean, Ulta, nice breakout, pulls in, is viable here. I don't know. Try buying it. You know, where is it going? It's not going anywhere. So I don't see a line of least resistance breaking. And here's a question we get all the time: has HFTs and leverage ETFs permanently changed the game for growth stock investors? I don't think so. What do you do for screening tools? We use Wanda, which is like the institutional version of MarketSmith. So I also use Bloomberg, Also use High Growth Stock Investor. How much volume do you need to consider a stock? Well, we don't. So I would say read our website, because you're asking us these very basic questions that are pretty much explained in the whole philosophy that you see on our website.
Type in keywords of what you're looking to find in the FAQ search bar, and all the relevant FAQs should come up.
Yeah, so you're asking what kind of volume do you need to see in a stock? I mean, you should know if you follow Neil methodologies, which is what we're schooled in, then you know that you want to see breakouts and whatnot on certain volume, and you know that if you're using pocket pivots the way we like to use them, there are certain volume parameters. So to me, those stocks are already. Interesting. FINRA, somebody's saying FINRA can classify you as a pattern day trader and put limits on your capital. Yeah, I don't really run into that problem. Just when my buying power runs out, it runs out. End story. And I think, let's see, do you trade on the 15? No, we don't really trade on 15 or 30-minute time frames. So there's really nothing. In our view, we're trying to play longer-term trends. You don't really see that in this market. There's something I did want to talk about, and it allows me to segue into this whole concept of using precedents. And we get some people, always asking us, well, does this look like this from this period? And I'd have to say overall, the whole precedent thing to me is just flawed, because you get bogged down with things looking the same. Doesn't mean they're going to act the same, because there's so many other factors. There's contextual factors. And there's a friend of ours who sent an email out. I don't know if it was just to us or he sent it out in the general distribution. And this person is actually a very good trader, I should point out. But they're saying that Oracle Corporation in 1999 resembles Intuitive Surgical in 2011. And so, let's just look at, here's Intuitive Surgical right here. I'm using, since you asked what we use, this is one of the tools I like to use. High Growth Investor stock software. High Growth Stock Investor software. And so this person sees a similarity in this pattern. And I think what I'm going to do here is we're going to do this. Let's mess around with this a little bit so I can kind of show you what I'm looking at. And I think in general, these are pointless. I really think, and people really want to get into it because that doesn't really work out in practice, and it doesn't help you in practice. Okay, so what somebody sees here is here's Oracle in 1999, and this is Intuitive Surgical. And I want to take a poll here. How many people think this pattern here looks like Intuitive Surgical today? How many people? Type in yes if you think it does. Type in no if you think it doesn't. We're taking a poll here. No, 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 no. One yes. No, no, yes. Well, mostly no's. I would say those of you who are saying no are right, because I don't see the. Dr. Do you see my screen, right?
Yeah, I mean.
Okay. Do you see a similarity in these patterns? I don't know what they're looking at exactly. First of all, if this is the cup with a handle and then a base on top of that to form a base on base, like this did, okay, I think that's as close as you're getting. But the direction of these...
That's about as close as it gets. I mean,
yeah, and that's about it. You see here, when you broke... Exactly. When you broke out, you took off. Here you broke out, you failed. So now I'm wondering, are they talking about this cup and handle, and here's a base on the base here? Well, this cup, if that's a cup, is like 4 weeks down and then back up. And it doesn't look anything like this. I mean, I remember Oracle intimately because I played this stock in 1999. It's how I was up 500-something% that year. And I remember Oracle because, look here, one of the things that strikes you about this pattern in 1998, 1999 is it was up something like, well, let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 15, 16, 17, 18 weeks in a row it was up. And I remember at this point it got into this tight base, and Bill got very bullish on the stock because it was showing power beforehand. And of course, it's holding in tight. You have a bunch of tight closes in here, and this looks constructive. So if you just get, only look at the pattern up to here, it looks like it's going to go. And it probably did, but then we got a correction. The market went into correction in the summertime, and this thing got cratered down a good 40% plus off the low on the weekly chart. from peak to trough, you know, and you come up off the low here, and then you move up and you form this nice cup with handle, which breaks out, but the market's not ready, and it forms another base here. And I remember just kind of nibbling on the stock in here, and I bet you going back, I wouldn't be surprised if there's a pocket pivot back in here at some point, way back when. And you know, and this is just real tight. You can see how this holds up, whereas this is just really sloppy action in here. And so I don't really see the similarity at all. But I think, you know, even if it did look similar, I don't think that it's useful. It's really that useful. You know, I'll show you another. I don't know.
Well, you know, the thing is, the tendency is that the human mind wants to see similarities. It wants to be able to simplify all the information, and it runs into a lot of trouble when it tries to oversimplify by saying, okay, this pattern looks like that. I mean, I've done data runs, where you can match up patterns that are more or less the same from, you know, one era to another, one market cycle to another, and it's meaningless. It's absolutely meaningless in terms of being able to profit in the market. It's just, if anything, it's an absolute distraction, because it might give you false confidence just because a pattern looks the same to go in bigger than you normally would.
Right.
And there is relevance to historical precedent analysis in the sense of if a lot of the criteria are similarly matched up,
right,
then you can say, well, more of the ducks in our row here. You know, that's interesting. But in terms of just saying that the patterns are matching up, it's absolutely irrelevant in my studies.
I would have to say,
you know, 1999 is a completely different situation than where we're at right now.
right, and it's almost ludicrous, you know. And I think people should be careful about what they go emailing around. There should be a lot of caveats in there, and because I think you're simple-minded beginning investor. I don't mean that pejoratively, but you know, most investors, you start out, your approach is very simple. You're just barely learning. They'll grasp onto something like that and misapply it. But you know, there was one example where I used this is Time Warner. You see on the left side here, on my High Growth Stock Investor software on a weekly chart, you can see this is AOL. So this is actually the pattern of AOL. And we had a very sharp three-wave bear market from, I think, was it August to October of 1998. And AOL was bucking the volatility, and you had a very volatile deep candle, which actually was accounted for by the volatility in the market. Now, in 2007, I noticed that First Solar, right here, was making a pattern similar to what AOL had done in 98, 99. You can see that these actually look similar, right? Dr. K, would you say those two bases look similar? Yeah, okay. Now the other part that was lining up here is that back in 1998, the internet was a phenomenon, and that was sparking a big new rally in the market at the time. So you had this group theme going on. Okay, that's one contextual convergence, number one. The second one is if you go back and look at a chart of the NASDAQ, and let's see if I can whip this out here real quick. Long chart. Here's the NASDAQ. Let's go back and look at 2007 during that period, okay? So now we're doing a little exercise on how to apply properly precedents if you're going to try and use it. But what it told me is that I could account for First Solar's volatile pattern based on what the market was doing. You can see here, this is the exact period when First Solar created that pattern, and you can see it's a very volatile, sharp break in the market. So there's the coincidental factors here. In 1998, you had the big bear market in October, ending in October of 1998. I think that was the long-term capital crisis, and so it's very volatile, and that accounted for the action, the pattern in AOL back then. Okay, and you can see you have the same action here in the NASDAQ. Here is evident in First Solar's pattern. Okay. And so there was a contextual basis for making the comparison. So that's really, you got to be a little deeper than that. You know, just saying, oh, it's 1999 and look, this looks the same. But I would even say that the similarity, there's no similarity in those two bases between Intuitive Surgical and I don't know what happened here. I guess they sent me back. No similarities. I mean, as you can see it here, First Solar. Now let's go back to Oracle here. That was a wonderful time, though, wasn't it, Dr. K? I hope we someday have another market like that. People wonder whether we will.
Well, you know, we'll always get new bull markets. It's just a question of when we're going to get a good, decent, persistent one. We haven't really had a long bull market since 2003, believe it or not. I mean, we've had pockets. We had 3-month bull market in late 2006, which was wonderful, amazing bull market, but it was only 3 months. But you know, you take what you can get. 2007, I think.
And that's all you need. That's all you need, though. I mean, I was, you know, in '99, I was up a few percent. I think I was up like 30% coming into October of '99, and then shot up to 500-something%, just like very quickly. And so when that window opens, it's going to happen. But you got to be paying attention, and you got to be using the right precedents, I guess, when you're trying to assess what's happening. But you know, I'm sorry, but if you look at those two patterns, I don't see anything the same. So if you're saying right now that Oracle at this point here represents, or was like iSearch here, or I don't know here, I don't know, whatever it is you're looking at, I don't know, those are good martinis, I guess. I have no idea. But so, but you know, and then the point is, there's other factors. It's much more contextual, and it's just deeper. And you can see how applying the AOL example in '98 to First Solar in October 2007, there was contextual similarities. Number one, a big group move in solars compared to a big group move in internets back in '98. And in 2007, October, you had a very, very volatile market. So, you know, and I don't want to make, I think the person who sent this out is a very good trader, and their track record proves it. But it does show that even among experienced O'Neill followers, there is, you know, there can be some misapplication or some even debate over some of these concepts, which, you know, it all gets back to what do we use in the market. We use pocket pivots, viable gap ups, base breakouts to buy stocks. With all the other characteristics, we don't really need to worry about what something looks like unless there's something contextual, such as the volatility in the pattern of First Solar back in 2007 compared to the volatility in 1998 with AOL. So that's really how we work that. And I think just be careful with trying to find precedents. You know, people always come out with that. And we find that we have the tools we need. Anyways, that's about it. We still got a bunch of you still hanging on there. Thanks for hanging on, you guys. We have no thoughts on Intel. Compliments on a great presentation in Vegas, by the way. Thank you very much. We got actually a lot of great comments. And tomorrow, we will be on the eTraders Expo. That's Traders Expo with an E in front of it. Or you know what, it's an internet-based webinar that we're doing for Money Show, eTraders Expo. We're going to do short selling, which was one of the modules that we did in our paid workshop at the Money Show in Las Vegas last month. And so hopefully you guys will be able to make it. It's free. We sent out the link earlier. You know, and I just want to say we don't have any control over how you sign up. Some people think they should be able to sign up by entering in their Virtuous Self Investing username. I don't know why. It's not our production. It is Money Show's production, and they control that. So we don't have any control over it. Hopefully you guys can come and check it out tomorrow, and we'll be talking about what's going on in the market. But for now, you know, just slow and steady. That's what we're looking for. Slow and steady may win the game here, and that's where we're going with this. So thanks for listening, guys. I think we're done for today. I'll do one last question I'm going to talk about. I talked about Ulta, but Biogen Pocket Pivot here. One thing, though, we talked about this before. Watch out. It's coming down. So you've got this thing coming down, and it has a pocket pivot, so it may need more time. You know, overall, though, the base on Biogen is acting okay. It's just trying to hang in there, but nothing going on, just like everything else in this market. Okay, so chill out, you guys. Play it slow, and keep an eye on gold and silver. That's really what we're into right now. All right. Thanks for coming. We'll catch you guys later.
All right. Take care, everybody.